Hi, it's Eleanor Curry with the Curry Law Firm and Astoria Real Estate, and welcome to the Opportunity Zone channel, where every week we're talking about important things that you need to know to decide if Opportunity Zone fund investing is a good decision for you and your investment portfolio. And today, I'm taking some feedback I've gotten and questions I've gotten from lots of people who have interest in opportunity zones, and we're going to run back an important component of investing in a real estate opportunity zone. So of course you can invest in a business or a real estate opportunity zone if it's located in a certified opportunity zone area. But an important component when it comes to the real estate side is really taking a look at the property that you invest in. So we're going to talk about some of those criteria because they're important. And I see lots of people who have purchased something, plan to hold it long term, think it may be a good idea for opportunity zone funds. But when it comes to the real nuts and bolts of that particular location, it may not work. So let's take a dive in. When it comes to investing in real estate opportunity zones, their property either needs to be new, which is great, or you're renovating an unused property. So if you are choosing to do the renovation, there's some important little criteria that you have to make sure that you're checking the boxes for when it comes to your investment. So the property needs to first, if it's existing, need to be unused because they're really looking to revitalize, significantly revitalize economically distressed areas. So they're looking for cash influxes. They're looking for you to buy a building and do something next that is also very important. You need to invest in the improvements more than the cost that you pay for the building. Listen to me again because it's very important. Whatever you pay for the building when it comes to opportunity zone investing in real estate, you need to be prepared to pay more for the renovations for that building. So that's a big deal. Often people have even a substantial renovation, maybe $200,000-$300,000, but if you don't pay that much for the investment itself, then it does not work for an opportunity zone fund. So that's an important part because that's a huge cash investment, and that may also throw off some of your numbers when it comes to certain types of lenders, especially hard money lenders, because it becomes then a pretty risky portfolio addition. So they may not be as interested in properties that need the amount of work that is required for opportunity zones. Now, that being said, there are still plenty of opportunities out there, and although you may have to bring a little bit more cash, hence the fund and your opportunity to really do some fundraising, getting other people excited about that investment possibility. So there are lots of potential there. So you do need to make sure though that if it's not a new building, if it's an older building and it is one, unused, and two, whatever the renovation costs will be are greater than the purchase price. And then the thing that doesn't matter for new or old buildings when you're investing in an opportunity zone fund, real estate investment, all of those renovations need to happen in the next 30 months. So you have some time, but not all the time in the world. They want things to happen relatively quickly, and this time frame can be a real crunch when you have a super large new construction plan for opportunity zone investment. So those are some things you need to pay very careful attention to when it comes to investing in real estate opportunity zone funds. And we'll tune in every week where we talk about things that are important when it comes to making the decision about opportunity zone investing, and you can really decide if it's a great investment for you. Don't forget, if you have any questions, make sure to send that to me, and it may be in the next topic for the Opportunity Zone Fund channel.